Hey, how are you? John Napolitano here with you with Top Trading Pros. I hope everybody is doing well. A topic that came up in the last couple of weeks, which I've been meaning to make a recording on, is something on contagion risk. So a lot of people ask, what does contagion risk mean exactly? People might have heard it on CNBC the last couple of weeks and stuff like that regarding all the banking crisis that's been occurring the last few weeks. But it's something that a lot of people aren't too familiar with. It only comes up really. Sometimes it doesn't come up at all, but it will come up maybe once or twice a year. There'll be something that occurs that causes a little bit of a contagious situation, which is why the name is called contagion risk. So a lot of people might think contagion risk has something to do with COVID-19. It really doesn't, although contagion risk is actually, the COVID-19 is an example of contagion risk. Basically, what contagion risk is when a situation occurs that was unexpected in the market. So an unknown unknown occurs. A known unknown would be like the Fed meeting yesterday when we knew at 2 o'clock Powell was going to say something. We didn't know what he was going to say. That was the unknown part. But the known part is that we knew he was going to say something at 2 p.m. and something was going to happen. So people position themselves accordingly. An unknown unknown, unfortunately, is when you have no clue. It hits you on a Tuesday morning when you don't expect it. And it just it could wipe everything out if you're not careful. But it also, and here's the good news, it presents an amazing opportunity sometimes. And that is really what I'm here to talk to you about. So at Top Trading Pros, I'm the options instructor here. We talk about different option strategies for different situations. And this is one of those situations where you could potentially profit from. So I'm going to talk about it. I'm going to jump into it and let's talk about it a little bit here. I am going to share my screen with you. I'm going to show you what First Horizon Bank looks like. It is a pretty ugly chart. And as you can see, when this contagion started to happen, you had the initial gap down. You had a day where it was uncertain and it continued to go lower, and then it closed a little bit up, and then it gapped down and it kept on going all the way down. Here is peak panic, what it looks like, by the way, right? And then if you'll notice, it's leveled off somewhat now that the central banks have stepped in and have given some confidence back to the markets. But here's the thing. Obviously, it has not recovered to where it was. But with contagion risk, here's the good news about this. I'm looking at a lower quality regional bank right now. Think about this for a second. What about the higher quality banks? What about the ETF of regional banks that make up 70 or 80 different banks? Those names have a lot less risk implied in them than some of these smaller regional banks where you don't know what's going to happen. So check this out. I'm going to compare FCN. I'm going to actually split my screen so you could compare it side by side. So here's a daily chart of FCN, and next to it on the right-hand side, I'm going to type in Goldman Sachs. Now, Goldman Sachs is a premier investment bank, okay? They manage billions and zillions of other people's money. Goldman Sachs is not going to go anywhere, okay? If there's World War III tomorrow, there'll be cockroaches, there'll be alligators and sharks, and there'll probably still be Goldman Sachs. So my point is this. Why is Goldman Sachs trading like First Horizon Bank, right? I'm going to point out something else. State Street Bank manages trillions of dollars of other people's money. So my question is this. Why is it trading the same way? I'm going to move this over here a little bit so you can see I drew some stuff on here. Why is State Street Bank trading the same way First Horizon Bank is trading? A bank that manages trillions of dollars of global assets is being treated with the same disrespect as a regional bank that has a lot more systemic risk than it does. How about a name like KBE? KBE is not even a bank. KBE is an ETF, or an exchange traded fund, that is a basket basically of all these other types of banks. So I believe First Horizon is inside of KBE, but guess what's inside KBE also? Goldman Sachs, not Goldman Sachs, but Wells Fargo, JP Morgan, Citigroup. All these larger banks actually represent a percentage of KBE. So why, do you ask, is KBE suffering as badly as these regional banks? And the answer is contagion risk. Contagion risk is when everybody just gets out of these things in a sheer panic. So when there's blood on the streets is when you have to start sticking your neck out and taking risks. So in my classes, I talk about how to look at opportunities like this and how to put together option strategies that allow you to minimize your risk and take advantage of these opportunities. So one of the things I'm going to share with you, one of the things I tell all my students is you have to have, there's 5 main components to every trade. There's your target, your entry, your stop, your time frame, and your sizing. And the acronym that I tell everybody is TESTS. So we talk about all of these little elements to set up a trade in our classes at Top Trading Pros. And basically, in a situation like this, you're missing one of the T's. You're missing the time frame part. You don't know exactly how long it's going to take for these names to recover. So to share my screen with you again here, unfortunately, what you don't know is you don't know how long it's going to take for there to be recovery. It might go a little bit lower. It might bounce around. It looks like it found a bottom here, right? But it could go a little bit lower. It could kind of bounce around here for several months until the banking system gets its act together, until the central banks give us more confidence, until there's some sort of positive catalyst that causes the stock to drift back higher. That could take several months, or it could take even a year. Who knows? So there are strategies in the option markets that you can use that will allow you to sit through that type of time and allow you to potentially profit. And these are things that we teach in our classes. So the poor man's covered call is a great strategy. It's something I teach in my classes. I teach you how to implement, when to implement it. It's a little bit of a take on the normal covered call strategy. There's other things you can do, like tight vertical spreads to sit through volatility like this. These are all things you'll learn in my classes. So I have an upcoming boot camp on April 3rd, where we spend 2 weeks together. You'll have access to all my educational material where you'll learn some of these strategies. It'll give you the basics and foundations for moving forward in the options market. I give 4 coaching calls during that time period live, not just recordings where you'll actually speak and we'll ask questions back and forth, and you'll be able to get some good information there as well. We have an upcoming webinar this Saturday and next week as well, so look for that as well. Follow us on YouTube at Top Trading Pros. Subscribe to our channel. We do videos like this all the time to give you some information and to help you on your way to options trading. So I hope this was helpful. Again, spend more time with us. I hope to see you guys all soon in the next boot camp and the next webinar. Other than that, follow us on Facebook. Check out our website, toptradingpros.com, as well as our YouTube channel. So enjoy the rest of your day. Happy trading, and I'll talk to you guys soon, everybody. Take care.